Morning, everybody. How are we all doing? Good morning, Steve. Please like and subscribe, as Steve says. That's why John's there this morning. Morning, Evil Baggy. There you go, sir. Oh, can't say your name. I'm not even going to attempt it. Morning, Danny, Church, Virginia, Neo, Yoko. How are we doing? All good. Hope you all had good weekends. It's the 1st of July. New month. Zeros. Starting on a zero. Always good to start on a zero. Morning, Monkey. So we'll go through the usual stuff today. Have a look at ADRs. Quite a few ADR hits on the pound today. Yeah, big sort of rally on the pound pre-market this morning. I can't see anything on the news about it, but anyway, I presume it's something to do with the election. Morning, Mark, Gregors. So we'll go through the news over the weekend, have a look at what's coming up this week, have a quick look at all the FX pairs, usual stuff, see what is doing what and where. Markets opened long both indices this morning. So I just need to quickly adjust these because I've got using 3.5 this morning. Can't remember. So with the stock index Hedge EA, I've gone back to 3R and 5R targets. Market seems to be livening up a little bit more at the open now. So I've automatically gone with 3R and 5R. I was using just a 1R scalp, but we've had some fairly decent days of late. So I've gone back to 3R, 5R, but I'm just going to monitor and watch it as it unfolds. But so far this morning, nice clean breaks to the upside. So this week, let's start off with the weekend news. Nothing much over the weekend. Morning, Callum. From a general news perspective, nothing out of the Bank of Japan at all over the push on the US dollar yen. We've had obviously all this stuff going on with the elections in France over this weekend, and it looks like obviously the far right are going to get into power. So quite what impact that's going to have on the euro is difficult to tell. If it suddenly goes into riots and all sorts of stuff, it could have a negative impact on the euro. From a financial perspective, I don't think there's a lot necessarily going to change. It depends what policy is coming, but we'll have to just keep an eye on that. The euro might be a bit volatile over the coming week. This week on Thursday, we've got the elections in the UK as well. So there is potential for a lot of reaction on the pound this week as well. It's very difficult with elections to tell what's going to happen. Sometimes you get big multiple ADR days. Sometimes you don't. It's just very, very, very hit and miss. So as you can see, there's nothing else over the weekend at all really exciting apart from what was going on in France. So we'll see what happens with all the election stuff this week. So from this week's perspective, obviously yesterday was the parliamentary elections. We've got the CPI for Germany coming out today. This is released state by state, so there is not one time. As you can see, it's an all-day event. Bank holiday in Canada today as well. But the states basically announce one by one. So if you keep an eye on Financial Juice this morning, you'll see each state, like Bavaria, will announce, and then they just keep announcing the different states, which gives us, once they're all announced, the overall CPI picture for Germany. Germany and France make up the majority of inflation for the Eurozone and the Euro. So there we go. Our friend Kanda has been fired. Is he? Didn't see that on the news, but there's more than one person with a finger over the button. But yeah, so that's announced this morning. We've got PMIs this afternoon for the US at 3 o'clock, half an hour after market open. Manufacturing PMIs, that's the Purchasing Managers Index, which is basically to do with cost of manufacturing up and down. And basically, if that goes up, inflation goes up. If that goes down, inflation tends to go down. So this has a fairly decent impact on the US CPI numbers, which means obviously it can have a fairly decent impact on the US. So the dollar might well move a lot this afternoon if we get a big deviation in pricing. They're expecting manufacturing to go up. So if it does go up, not necessarily a bullish move on the US, but it won't be bearish. It'll be more neutral to bullish. So we'll see what happens there. But if it obviously is a massive bearish number and it comes down an awful lot, that could drop the US a little bit. Lagarde speaking later as well. Then into tomorrow, we've got CPI for the Eurozone. So this is the flash estimates. We've got Lagarde speaking again not straight after those, in the afternoon, along with Powell. So potential for Powell to say something tomorrow just before JOLTS. And then it's non-farm payroll week. So Wednesday, we get the ADP and the unemployment claims. We've got the services PMIs, and then we've got FOMC on Wednesday. This is just the FOMC meeting minutes. It's not the press conference. So it's the less impactive FOMC. However, obviously, if they do come out and say anything about interest rates, it's going to send the market into a frenzy. We've got the Swiss CPI numbers coming out, which are planned to drop. That will possibly have a big impact because the Swiss keep dropping their interest rates. If that CPI number keeps coming down faster than expected, it's going to be another drop for the Swiss, which means the Swissy will come down. So that could be a big one. Parliamentary elections, eh? We're electing our government. Parliamentary. It is parliament, I suppose. But on Thursday. So volatility in the pound could be absolutely anything. And then we've got non-farm payroll on Friday. So the unemployment rate for Canada and for the US. Forecast to stay the same roughly or go up potentially. So it's a busy week this week, but it doesn't kick off until Wednesday. So it all starts on Wednesday. That's Tuesday. Starts on Wednesday with the unemployment claims, PMIs. We've got a little bit coming in on Euro as well. So basically every day this week, there's something happening. But it's really Wednesday, Thursday, Friday, which is the focus of the news this week. So it could be a big volatile week this week. We'll have to wait and see what happens. But at the moment, the main concern will be for pound positions on Thursday. So that pound this morning was obviously opened with a big rally this morning. So the market opened up and shot straight up this morning. So lots of bullish price action on the pound. I suspect this is just the market sort of getting ready for what they are obviously anticipating maybe being a bull move on the elections. But wait and see. It could also be just profit take and continuation down leg. So we've still got no confirmation from Bailey as to when we're going to change interest rates on the pound. It's just not happening. We're not getting any info. So unlikely we will this week either. So Bailey's not talking at all this week. We've got Lagarde talking twice, and we've got Powell on tomorrow. So that's the news for the week. Busy week. So plenty of potential for movement. So far this morning, ADR-wise, we've had mainly pounds. So I'm not quite sure what this move is about on the pound. There's nothing pound-related here. Had the house prices coming out, but the market started moving before that. So not quite sure why we're having this little rally on the pound, but we are. So there's potential mean reversion opportunities on these. Pound odd, for example, obviously that's already played out, so you've missed that one. We've had the reversal alert actually 5 minutes ago, but we've started potentially a leg back down on that one. Profit take moves straight off of ADR, look. Pound CAD straight into ADR. Again, reversal alert, gone in, same place, potentially for shorts. Pound Swiss also hit to the upside. At ADR, you haven't had a reversal alert on that one because it's rallied a bit faster. Pound yen, obviously all the yens are ridiculously extended at the moment. So there's your reversal alert gone in there. So looking for potentially a second leg on that one. And New Zealand Swiss. So the Swiss franc obviously moved as well. That's a gap down situation though. So gaps on a Monday, always tricky ADR plays, because they're not really ADR moves. It's the gap that's caused the ADR, and that's a good third of an ADR there. So New Zealand Swiss and the Euro Swiss I would not class as real ADRs today. Euro gapped up basically at the open and has gone into ADR, but it's kind of just sitting there grinding around. So again, we don't know what impact any of this parliamentary stuff in France is going to have on the euro. Don't forget the euro is made up of more than one country, obviously, so it's not just all about France, but obviously uncertainty and unsettling will affect the currency. Interest rates are coming down. Lagarde this week is expected to confirm a pause. So she's speaking at 8 o'clock tonight and she's speaking tomorrow afternoon. We're expecting them to say that they won't be dropping interest rates this month. And then we're going to look at inflation figures and see what happens next month. So with the euro, it could be slightly bullish for a bit, but we'll have to wait and see. So we're coming back up to a nice double top potentially at that gap fill. So good ADR potentially on that one today. But there's no real reason for the euro to be bullish. Obviously, interest rates are starting to come down. As you can see, most of them kind of been in a holding pattern for the last week, not gone anywhere. So I've got a short on euro pound at the moment. I'll get down in propulsion. Down there. There we go. Right. RSIs. There's quite a few. Let's just quickly see what the indices are up to. Stalled out at the moment. So clean break on both, but no follow through. So there's your opening range. So we're just holding inside the opening range at the moment. No movement. A little bit dead. I was kind of expecting a little bit more of an explosive move on the DAX this morning because of what's gone on over the parliamentary elections this weekend, but obviously market thinks otherwise. It's quiet. Morning, George, Bellino. Said that about Candy yet? I've already covered that one. Morning, Chucks. So we'll have a look at the RSIs this morning. So the hourlies, Euro Swiss is the big one on the hourly at the moment. So we're just approaching that 80 level on the Euro Swiss. So there's a good looking potential short there at the previous week's high. So this is a high from 2 weeks ago. There, which was the gap fill, which was the previous support. So this is where we gapped down on the parliamentary stuff that was going on. And it's pushed back up to that level again with a nice extension. So the 80-20 level on the hourly is a very good level, very strong reactions most of the time. There's one there as well. So you should be looking at least for a gap fill play on this, just back down into here. So good looking short opportunity on the Euro Swiss. Euro Yen, again, obviously we know all about the Yen. It's massively extended, so not 100% on whether that's worth taking. But if you are trading the Yen, you've got an extension there. I'd leave that one alone, though, to be honest, at the moment, because the Japanese do not seem to have any power. Euro US dollar also hit. We got an ADR hit to the upside on that one. Got a short on that one. Gap's not going to be enough money, is it? Take that. So yeah, going to go for the gap fill play on the Euro US. That's just breaking out of a range at the moment, but extended to the upside. So potential resistance upside kind of anywhere around here, basically. So there's potential for this one to run for a little bit, but it all depends on what happens with the US news. This could also be a false breakout this morning and come straight back down into the range. So I'm short on that at the moment. We've also got pound yen extended. Again, another yen pair extended to the upside, but as you can see, the yen is just dying. So anything you short against the yen, it's a risky one. And when there's quite a few 4-hour RSI extensions as well, Euro Swiss being one of them on the 4-hour. Very extended above the 80 level. Again, 80-20 level on the 4-hour RSI is fantastic. So when you get to these levels or above them, you tend to get very good reactions. Although against the Swiss franc at the moment, it's a little bit unusual because the Swissy obviously is just dumping its interest rates without telling anybody. which is causing all sorts of weird movements on the Swiss. So again, the Swiss franc is one of those currencies at the moment I'm just sticking clear of because we just don't know what they're doing. They don't know what they're doing. We've got their interest rates coming out, their inflation figures coming out on Thursday, forecast to come down. So in theory, you should be bearish, Swiss. Market doesn't work that way with the Swiss franc, though, because it's a safe haven. So it's a very, very, very tricky one to read, especially with the euro at the moment, because obviously they're very close trade partners. So tricky euro Swiss, but it is extended to the upside. So it is a good looking short opportunity, but it's one of those where, I don't condone using break-even stops very often, but it's one of those where if you get it into profit, you kind of just protect it just in case, because it could do absolutely anything. Yeah. So interest rates have been coming down on the Swiss. It's been powering up against the euro. So it's a difficult one to call, that one. But yeah, so I'm going to go through all the pairs anyway, so I won't go into more detail on the RSIs, but you can see where the opportunities are. Virtually everything at the moment, opportunity-wise, is on this yen. I've got the US yen short on still, holding it. I'm hoping I don't regret it this time like I did last time, but I've taken a 1% loss on it at the moment. I'm sitting in 3.5% of drawdown, but it's not going to look at my average. Yeah, it's an ADR to get out of it. So I'm not particularly worried at the moment. I've been holding it for a week. I will probably scale out of some. I very, very, very nearly got out of some on Friday. I almost took that position off on Friday. I decided not to in the end. Should have done, obviously. But I was just going to do some drawdown control on Friday, but I didn't do it. So, because I was kind of hoping we were going to break this low. We didn't. We just basically triple bottomed. So we'll see what happens with this today. But we got loads of US news this week. And obviously this afternoon being the first one. So if we get a negative PMI number, if we don't get that 49 and we get something like a 48, good chance we're going to see a drop in the US today, which is obviously going to help that come down. So we will see what happens. Morning, everybody else. Adrian Lagarde speaking 4 times this week. 4, is it? 1, 2, 3, 4. Yeah. I don't know. Well, it's not normal, no. But ECB forum on central banking. She is with Powell at the ECB forum on central banking. Oh, it's the ECB forum on central banking. Yeah, all week. So that's why she's speaking. So with that's an economic meeting at AIX en Provence. Yeah, I mean, she's basically there's a forum going on, obviously, somewhere. So with these sorts of forums, it's more talks than questions, which is why it's probably in orange, because it's basically her talking about specific subjects rather than taking questions from the floor, which is where we tend to get the juicy stuff. So I don't expect there'll be a lot out of her, but we may well find what, she just says, as expected, we're not going to be dropping the interest rates this month because of what's going on with inflation, in which case then it might give euro a little bit of a bullish stance. She equally could come out and say inflation is on track. We may well consider another drop this month, in which case then we'll get a move on the euro down. So we'll have to wait and see. But I wouldn't expect... The thing with this is, it's once she speaks, the next day it's got less impact. The next day it's got less impact. The next day it's got less impact, because if anything juicy is going to come out, it tends to come out straight away. So you can kind of write the rest of the week off with regard to her. But it all depends. I don't know. This is what this news is all about. This is why we keep track of this, because you've got to be aware of when potential movement is coming. So we know that 3 o'clock this afternoon, there's potentially a big move on the US. So I'm going to hold my US yen and wait and see what that news does. If that news is good for me, great. If that news is bad for me, I will make decisions. But you've got to keep track of when things are going to happen. That's why we sit here most of the time just sitting and watching candlesticks go up and down, waiting for news. So you just keep an eye on it, and that's all you can really do at the moment. Is the whole market is driven by news, as we know. So right, we'll go through all the pairs and have a look at how everything is panning out. So bear with me a sec. Hedged on the DAX. I mean, gap down target on the DAX is absolutely fine. So I'm going to leave that in place. So you can't quite see the TP, but it's at ADR at the gap. Upside. I'm sure we're going to get up there, but I'm just going to go south of that propulsion gap to the upside if it goes long. Got a feeling it might be a whippy one today. We'll see. Right. So I'm going to cover all the yens again. First of all, don't we have a US public holiday? Don't think so. We've got a bank holiday in Canada today, not in the US though. One in Canada. Afternoon, morning even, Franco. So yens, going to start off with all the yens. Obviously this weekend we've had nothing from the Bank of Japan. So we've had multiple times now the Bank of Japan coming out and saying they are watching FX moves very closely. We will intervene. We're not going to muck about. You're pushing it too hard. Nothing this weekend. And nothing this morning. And as you can see, Aussie yen popping out the highs again. So let's start with the US yen. So the intervention obviously happened at 160. Actually at 161.280, basically, pretty much. Or wherever that high is there. Yeah. So 4th of July. Oh yeah, 4th of July is bank holiday, in the US. Yeah. You're right. That's when our elections are. Everything in the UK is revolving around the 4th of July because it's all of our elections. So off on Thursday. So there won't be a stream on Thursday afternoon this week. What I might do actually, I might move Thursday stream forward and we're doing 8 o'clock on Thursday. So with the yen, obviously this is the last intervention level. Sorry, no, it's not now. That's the last month's high. The last intervention level was there, 160. So we've broken out basically last week above the intervention. So at the moment, it doesn't look like the Japanese can do anything about this. They had another quick crack at a big order going in there, which didn't do anything. Whether that was them or not, we'll have to wait and see. Or we won't ever know actually. But it doesn't look like that was anything to do with some attempt at intervention at that level. It was more of a shot across the bow by the looks of things, which didn't work. So we are stuck again, looking for the next level for an intervention move. So 161, which is around about where we are right now, up to 163 is what some banks are calling the next area of interest, if you like. So the fact that they're not saying anything, they're going quiet, obviously means that they haven't got the power they used to, and they can't just stick these moves in willy-nilly anymore. So we're kind of stuck in a perpetual upward movement against the yen. So all yen pairs, as you can see, are taking advantage. Everything is pushing higher against the yen. It will get to a point where they will try to do something about it again. Swiss yen, obviously, you can see is a lot weaker. CAD yen's pushed out the highs, and Aussie yen pushed out the highs again today. So it looks to me like this thing is well and truly stuck. The only thing that's going to help this is if the US dollar drops today or on any news this week, in which case, obviously, then it takes the pressure off the Japanese having to do something about it. If they get positive US news, it's going to push out the highs. That's going to make them want to do something about it. So as we know from the last intervention, the US and the yen discussed it and talked about it. So the US were pre-warned it was coming, obviously, because it the detriment of the US, because they're liquidating overseas bond purchases and stuff, all the assets they're holding in the US to pump the yen. So no idea what's going to happen. We just got to keep an eye on it this week. So I've got shorts on at the moment. I got out of one last week. I'm holding. I've put another position on. Again, I'm going to let this run probably to somewhere between 5-6%. If it doesn't look like any interventions coming, if we get positive news on the US, I'm just going to scrap it and take the loss. Can't do anything about it. It's every single time I'm getting into the yen, I'm getting the timing just ever so slightly wrong on it, and it's not worth holding for a massive amount of time. So the last one I got out of with a 9% or so loss and managed to put it all back on the intervention move. So I was lucky to get the money back out of it, but don't have any faith in them at the moment, and especially the fact that we're not having any noise coming. Yeah, we're up at those highs. They should be screaming and shouting at the market. They're not. So I'm not really convinced that we're going to get a move, which means we are reliant on purely US negative news to get that yen down. So we'll have to wait and see what happens this afternoon. First news this afternoon. So if we get negative news, fantastic. I will probably just jump ship and then walk away again. If we get positive news, I'll be jumping ship and walking away again either way, because I'm not going to hold it. So wait and see what happens with that one. So those are all your yens. The Swiss franc at the moment, we've got the CPI number coming out for the Swissy. We're at 1.4. We're forecasting another drop. So we're doing drops basically, as we know, on the interest rates. Inflation is coming down. They're forecasting 1% by end of year inflation. If you look at the forecast, we are a 0.3 forecasting a 0.1 month on month. So they're forecasting CPI to be coming down again. If we get that, that will likely send the Swissy negative. So moves down on the Swissy. If it comes out as expected as a 0.1, or it goes up ever so slightly, I don't think it's going to make the Swiss franc particularly bullish, because they've already dropped the interest rates. So I just don't know what to do with the Swiss franc at the moment. It's going back to the way it used to kind of be before we had all these interest rate rallies, where it was always unpredictable, because obviously it's a safe haven. You get pumps into it. They've also announced now that they will do intervention moves in both directions. So they will weaken their currency or pump their currency at will. So it's one of those, a little bit like the yen at the moment, where you are at the mercy of the Swiss National Bank, and they can do what the hell with it when they want to do whatever they want to do. So as far as normal movement of profit taking, that will continue to happen as long as there is no intervention going on. We don't know when they're going to do it, how they're going to do it, and to what extent. So it's too vulnerable at the moment to wild squeezy movement. So I'm just staying clear of it at the minute. However, it's moving fairly nicely at the moment, but it's very much the same as before. Push, stop, push, stop. We're not getting that nice market structure movement on the Swissy at all at the moment. On longer term it is, but this is the trouble. This is the sort of stuff you can get stuck in with the Swiss at the moment. You can get stuck in it with any currency, obviously, but with the Swiss specifically at the moment, when it strengthens up, it does massive ADR, multiple ADR days, doesn't it? For no reason really, and then it just stops and gets stuck. So all the Swiss franc pairs at the moment have been weakening, as you can see. So they dropped interest rates again unexpectedly. It's having the exact effect, increasing. It's just, it will move erratically. So at the moment, it's kind of the sort of instrument. ADR hits and scalps is really all I would be interested in doing on this, and I don't really do that, so it's not something I'm going to get involved in. But at the moment, the moves are very, very long and protracted. As you can see, that's a good month or so that move has taken to unravel. So they will unravel, but you will be stuck for ages in them. So just not really worth getting involved in, I don't think, at the moment. Swiss yen, as you can see, the yen is incredibly weak. The Swiss is incredibly weak. A week against a week is range. So we are sideways at the moment on that. You can see how weak that Swiss franc is because every other yen pair is breaking out. This means that the yen is pretty much the same strength as the Swiss. Nothing. It's just got nothing at the moment. And the longer it has nothing, the Swissy, the more chance there is of the Swiss National Bank just pressing a button and pumping it, which means a move will come out of absolutely nowhere. If you're on the wrong side of it, you're going to get stuck. So short-term intraday plays like this one, for example, Euro Swiss, ADR hit to the upside, drop down, wait for a reverse alert, scalp it, get it broken even as fast as you can, and try and make a little bit of intraday money if you want to trade it. But long-term, very hard to pick a direction on it. Pound Swiss. So support resistance levels are a good plays. So like this one we got here. So, lovely little short. Use traditional stop loss methods to try and get in and out of it. Risk reward based trading. It's nicely extended to the upside. We've got confluence at a high, which is also a previous low. So it's a good support resistance. It's a weekly level. So you're going to find limit orders sitting at the weekly levels for banks and institutions. We've got a gap fill play to the downside. We've got an RSI extension to the upside. Perfect setup in it for a short. So when you get a reversal, which should be in a minute, hopefully, very, very simple risk reward play back down into there. There's your risk. There's your reward. 2-3R. So that's really all I would do with those sorts of things at the minute. Pound Swiss as well. You've got an ADR hit to the upside. It's got more upward movement though to 200% of ADR at the moment. So there's plenty more room on it. You might find that propulsion gap holds, in which case then you'd be looking for a push back down into there. Again, reversal, that's already triggered on. Oh no, it hasn't. That was the one that had the big strong move up, wasn't it, into ADR. So no reversal on that one yet. New Zealand Swiss, you have had the reversal alert already, but as you can see, it's stuck, going nowhere. And the US dollar Swiss, obviously, this is going to move on news later. So the US dollar Swiss is the one that will tend to get you into the most trouble. Because if you get the Swissy having a dump or a pump at the same time as you get the opposite happening on the US, which obviously happens all the time, news on the US, you're going to get double the squeeze, which means it moves twice as fast and twice as hard against you, which can obviously be very painful. But that's unraveling quite nicely, that move at the moment. But as I say, it's taken over a month to do it, and it was a big, strong, horrible push. So breakouts of these accumulations are probably good plays as well at the moment. Yeah, if you can manage to get on a breakout and hold it, but that's not the sort of type of trading I do. I don't hold positions for a long time. It's not me, but pretty erratic as you like at the minute. Big old propulsion gap target to the downside, but that is the interest rate drop that we weren't expecting. So chances on the market isn't going to get down there unless we suddenly get something bearish coming out of Powell. And the market suddenly goes, oh, they're going to drop interest rates. But at the minute, that's not happening. So we will see what happens. Wayne, yes, it's celebration getting away from the English. Yeah. 4th of July, British Thanksgiving Day. It's not this week. 4th of July this week is, holy crap, we're changing our government. That's our 4th of July. I don't know why they chose the 4th of July. That's, Independence Day for Britain, isn't it? Getting away from the Conservatives. Who knows? We had a tea party. Live in Boston, do you? Boston Tea Party. What did I say? I saw a documentary about that the other week. Anyway, boring. Right, Aussie dollar CAD. So we're in a symmetrical triangle contraction at the moment on the Aussie CAD. As you can see, that was the last signal short. Nice and easy, in and out. Nothing since then. So totally sideways and stuck on the Aussie. The bias on this is long Aussie. Australians going to increase their interest rates. Canadians have already dropped their interest rates. So this is definitely a bullish bias, but not an awful lot of movement coming out about this one. These are both commodity pairs, commodity currencies. So they tend to move quite a lot at the same time in the same direction. So it's obviously very range bound at the moment, but the bias overall, if you wanted one, would more likely be long on this because of the interest rates, as you can see. So at the moment, though, we are stuck, totally stuck in a 2-month range. It's just not going anywhere at all. And it's, as I say, we're forming a contraction. So at some point, this is going to take off. It's going to take some news, obviously, to do that. So we'll have to wait and see. Obviously, we got the Canadian unemployment rate on Friday. That could well kick it off. We've got bits and pieces of Aussie news this week, but nothing exciting. So focus this week really is going to be on the US and on the pound specifically, and potentially the euro, depending on what happens with those French CPI numbers. But sorry, euro CPI numbers. So at the moment, there's no signals on this anywhere. But if you wanted to, the best and the easiest entries are going to be ADR hits to the downside. So if we come back and retest this propulsion gap today, for example, that'd be a good long opportunity down at ADR. And yeah, eventually look to push out and break out those highs. Obviously covered that one, covered the yen up. Aussie, New Zealand. So again, both of these have said that there is a good chance that they will need one more interest rate rise because of the inflation numbers are not going the way they want, as fast as they want. So the bigger economy tends to win out, Aussie. So long term, you'd be looking more for Australian dollar to take control. But as you can see, it's just not going anywhere at the moment. Again, interest rate changes haven't been happening. However, the market has been reacting massively to the interest rate numbers. Although there's been no changes, the market has definitely turned tail and run the other way. So longs at the moment, more than shorts. But because these two are obviously very close trade partners and there's no incentive for currency to get massively strong or massively weak because it harms both of them, it tends to stay very much as sideways as it can. So we're sitting waiting at the moment towards the top of that range. So scaling into a short position is probably the best thing to do. Come down and test some of this propulsion, and obviously we've got that massive propulsion gap there now, but also likely it's going to head up and hit that before it decides to pull back down again. So we are kind of, if you look there, in a similar position. We're sitting around here at the moment on the way up. Yeah. So we'll probably get a double top reaction at that 2-month high. If it heads up there, if not, obviously it's going to come back down to the lows. So at the moment, there was a short signal week before last, which you'd be in now. So yeah, not really going anywhere. However, it is moving quite nicely within that massive range, of which I think it looks like we're heading towards the highs of. But the bias on it is a long against a long. However, obviously the Aussie is a bit stronger, so it'd be more of a long than a short. Aussie US sideways totally. Again, anything with the US dollar, I've said this many times over the last few weeks, anything you're trading the US dollar at the moment, it is just doing that. It's a beautiful, beautiful thing. If you just trade the everything against the US dollar at the moment, just in, out, in, out, in, out, make money, make money, make money. It's brilliant. But don't get too greedy with it because obviously it's not getting very far. Yeah. So ADR high is there. ADR low is there today. So you can see that this range here is roughly 2 ADR. And that's all we've done since April. So we are literally in a 2 ADR range, up, down, up, down, up, down. So any extension to the upside shorts, any extension to the downside longs, ADR hits to the downside long, ADR hits to the upside short, easy. So just waiting for it to get to one of those levels to get in again. But obviously bear in mind there's news this week. There could be potentially a shift depending on what happens with that unemployment rate. But as you can see, sorry, that's a Canadian. As you can see, it's forecast to stay where it is. So it could well be that we just get that big whipsaw on Friday, and it doesn't go anywhere. So if we get news and it pushes hard to the upside and it's not expected, likely the limit orders will trigger here. So you're going to have loads of limit orders triggering at those highs. You've got loads of limit orders triggering down at the lows. So there or there. Easy. CAD Swiss covered already. The Swiss stuck. No idea. CAD yen have covered. Swiss yen covered. Euro odd. So all the euros. So this week basically is a tricky week because we've had these French parliamentary elections now. When it was announced that the French Parliament was calling an election, we had that massive gap down, which filled. So we've had a gap up this morning on the news of what's going on with the elections, but all this week you could have turmoil in France, which is going to affect the euro. News-wise, we've got the CPI coming out for Germany, which is forecast to tick up, which it should confirm that there won't be an interest rate drop this month, which should give it a slightly bullish stance, neutral to bullish. So as long as that comes out at a 0.2, or if it comes out higher, we shouldn't see weakness too much in the euro. We have got the core CPI estimates forecast to drop though tomorrow. It's going to be one of those, possibly those sorts of weeks for the euro. So at the moment, the stance on the euro should be bearish because they are dropping interest rates. So everything on the euro is coming down at the moment. We're in a pullback at the moment. So great opportunity for shorts. As you can see, I've just got into one there. And I will be playing the short side only on the euro at the moment. So nice big targets on it. So any euros, basically, you get, that's a lovely double top just gone in there. Look. Reversal alert at the previous high. Scroll out. So yeah, any reversal alerts to the downside, any ADR hits to the upside, any RSI extensions to the upside, good for shorts. Have you seen Bellingham's bicycle kick? Yes. Of course. I watched England play yesterday. Why wouldn't I? Franco, UK, USA, just like family, we fight and then make up. Yeah. Although at the moment, no idea who's taken over your elections, because that debate last week was a joke, wasn't it? Convicted felon fighting old fuddy-duddy who can't get his words right. Who'd you pick? So yeah, be interesting times in the US over the next 6 months as well. There's so much going on. We've got France falling apart. We got pound or England, completely new leadership we haven't had for the last sort of decade and a half. US still kicking off. It's just bizarre at the moment, isn't it? New world order. Things are changing. The golf part was awesome. Golf? Golf? Oh, what, in the Biden? I don't know what the golf part was. I didn't watch the whole Biden thing. I just saw the news highlights. So I don't know if they were talking about golf. I don't know what golf is. Certainly wasn't to do with the football. In the debate. All right, yeah, I didn't see that bit. I just saw what was on the news, the highlights. And all they were focused on was basically Biden getting it all wrong. Which, he's old. They're both old. Why can't you have young politicians? Yeah, I know you needed a bit of life experience, but really, that old? Anyway, euros short. So Euro CAD in short at the moment, looking for a push down. Euro Swiss. So this one is a little bit different with bias in that the Euro and the Swiss tend to quite often move together. Last 15 minutes, they were talking about how many yards you can reach. Oh, right, I see. It's the thing, isn't it? In American politics, they just bicker and poke at each other all the time. We don't do that in the UK. It's just a completely different way of doing politics, isn't it? Anyway. Euro Swiss, we've already looked at really. Euro Swiss, good level for support, resistance rather, and basically these move together, so it's a little bit more tricky to trade the Swiss and the euro. That's a much tighter range and less movement, hence a lot more of this bit of news. Yeah. So not my favorite pair at the moment. Euro pound, just take another short on that. Gap fill's done. There we go. So there's your gap fill play completed. I should have held it. I'm glad I didn't. So the longs that I had and I was holding for the gap fill, I decided to get out of them early last week. Then I took another long, got out of that one because it was really struggling. It's taken a good couple of weeks to get back to the gap fill, but the gap fill is now done. We're running back into resistance. Nice reaction to the downside. This is a short. This will be coming a short at some point. But at the moment, Bailey hasn't mentioned what we're doing with interest rates. So right now, this is a bear against a bear. However, I will take this in either way because euro pound close trade partners, again, one of those currencies we don't tend to go anywhere on. It's tight, it's range bound, it's low ADR. So you can trade it really in either direction. It can take a long time to get out of though, unfortunately, because if you get one piece of news go against one of the currencies, you tend to just get stagnation for weeks while we're waiting for another bit of news. And if that bit of news, as in this case, went down as well, you can see that the length of trades, there's one there. So that took 2 weeks to get out of. Simple short took a week and a half to get out of 2 positions. Then we had the gap down long, which took 2 weeks to get out of. I could be sitting in this until middle of next week, but hopefully if Bailey doesn't say anything about pound interest rates in the coming week, that euro should start to come back down again very, very quickly. So the stance on this one for me is neutral. Yeah, because we've got a bear, they're reducing interest rates, but they're going short, not reducing, not reducing, not reducing. Pound, we will be reducing our interest rates because we've hit our inflation target. It's just a case of we need confirmation of when. So you've got a bear against a bear, which equals a range. So this one you can trade long or short, really, from a fundamental perspective. I will be, but it could go off into a massive rally, but I doubt it. But we don't know what's going to happen with our elections, and we don't know what's happening with their elections. So, it's tricky times from a political perspective. But I've got target on that short at the moment in that propulsion gap. In case we get down to there, I'd like to get out in case then suddenly Bailey says something, and then obviously this is going to rally for a little bit while we're shorting the pound. So Euro New Zealand, very much the same as the Euro odd at the moment. Very, very sideways. Lovely market structure on this. It's beautiful. Just push, pull, push, pull, push, pull, in, out, very easy. So this is, lovely to trade at the moment, Euro New Zealand. It's a bull against a bear. So bias really should be short on it. However, we've known this for a while on the New Zealand that the interest rates and inflation are bad, and it's not getting any better. So New Zealand at 4% inflation still. So should be a bearish bias on it. So taking shorts, haven't had an entry, very close to getting in there, and getting in there, but didn't quite get the signal, unfortunately. There was one there. Possibly one there, and there was a lovely one there. So looking for short opportunities basically on that one, same as the Euro odd. But I'm in Euro odd. Oh no, I'm not in Euro odd. Didn't get a signal on that one either. So ideally you would want to trade one of these, not both, because Euro odd and Euro New Zealand are going to do very similar things because they're both a bear against a bull. So there's your euros and the Euro US dollar. So Euro US dollar, again, another one I don't mind trading in either direction. It's probably more that at the moment. The US are not reducing their interest rates probably until 2025 now because they can't get inflation under control. But it doesn't mean that it should be bullish because they're not going to be putting interest rates up at the moment. You never know. So it's just news driven, as you can see, news. Yeah, but it's undoing everything nicely as well. It's the biggest currency against the second biggest currency. It's the most liquid pair available. It will move up and down a lot. So don't mind trading this in either direction. You can see loads of entries on this one. There's a short there, there's a long there, there's a short there, there's a long there, long, short, long, and now I'm short. So every RSI extension, basically, just letting the reversal alert or the position trader EA, whichever you're using, get in and get out. Targets, it's whatever really. I mean, this for me isn't a simple target gap fill. You could play the lows, and it will break out at some point, obviously. So it might break out the lows. This might be a breakout upside, and we're going to come up and test here, which means I'm going to need a couple of scale-ins. But we'll wait and see. But yeah, don't mind trading that in either direction at the moment. Pound. So all the pound pairs are a little bit tricky because we're waiting for Bailey. So our inflation target is hit. We got it. Brilliant. Our interest rates are the second highest worldwide. Not good. So we have hit target. No one else has, apart from the Swiss. And we haven't changed our interest rates. That's not normal. Yeah. So I know that most of the central banks at the moment want to wait and confirm, but we've hit target. That's what you said you wanted. That's what you've got. Now pull this down fast. Otherwise, that's going to overshoot and we're going to be in big trouble. So I'm expecting any day Bailey to come out and tell us that the interest rates are going to be dropping this month. Not happening. So we're waiting for some confirmation. I'm just scrolling forward to see. When I think it's August, isn't it? Beginning, I thought. Yeah, there we go. So August the 1st. Yeah. So it's exactly a month away, our interest rate. And this, if they don't drop it, I will not have a clue why. But they are definitely going to need to drop interest rates. So I'm expecting, and what tends to happen with the market is before an interest rate drop happens, the market prices it in. It factors that in. So what we should see at some point in the next 2 to 4 weeks is the pound starting to weaken as they anticipate that drop coming. So at the moment, we haven't got that, but it's sort of starting to happen, as you can see. So at the moment, I've got my EAs set up to trade both directions on pound, but I'm getting close to the point where I just want to go short only on it. And the same with the euro. So as you can see, we got news stuck on the pound CAD there. The euro, the pound odd, a little bit of news, and then back into a range. The ranges are fairly decent wide, so there's plenty of opportunities to get out of positions on this. There's good market structure going in all over the place. So yeah, you can trade at the moment in any direction, but it is going to start to become more and more bearish, this pound, as we get further into July. And then all of a sudden we come into summer trading and the ranges go tight. So yeah, shorts at the moment. But as you can see, you had one opportunity for a short there. You had one opportunity for a short there. I think you're going to find it hard to get into short positions. So today is a prime example. ADR hits to the upside, which will be nice pullbacks into propulsion, 50% retracement, absolutely perfect short. So 5-minute reversal. Yeah, lovely. So yeah, shorts at the moment, I think, but you can still trade it in both directions because we've still got no confirmation from Bailey. But I think the whole market is looking at it and going, why have you not done it? Why are you not doing it in July? Why didn't you just do it in June? Because you hit your target. Yeah, we had an interest rate announcement come out 2 days after we said we hit inflation target. You need to drop it. So it's a tricky one. What I don't want to be is in a long position that I get stuck in for weeks. So you got to be very careful, I think, with the pound this month. News-wise, this week, obviously, the pound, we've got the elections coming up, but that's the only news we've got for the pound this week. it may be that the market waits for that election to be over, and then they will start to scale out of pound positions. So I'm toying with the idea of flicking short only. The problem is I'm not sure that they're going to get into any positions. So I'm thinking what to do with the pound at the moment. But right now, it's tradable in either direction. So pound CAD completely stuck. You can see that one there. Look, that was a break-even stop on news. The Canadian dollar news spiked me out, but hasn't gone anywhere since that RSI extension. That was a big old RSI extension as well. Stuck. Yeah. So I don't think the pound is going to have much oomph for longs. I think it's much better to be looking at short-only positions on it at the moment. Pound Swiss, again, same thing. This is a lovely setup. Look, hasn't quite got the RSI. So you can see the RSI extensions. We're not getting relative strength from the pound against anything to give us any short signals. Although it's been going up nicely, it's because of the Swiss franc weakness. There's no strength in the pound at the moment. And there shouldn't be, because we are expecting interest rates to come down. So good short opportunity, and likely market structure will go in high, because we've got a high, a low, lower high, lower low. Lower high propulsion would be absolutely perfect. And then put a lower low in. So this is the sort of thing you can hold for long term if you want to, and get a really nice short position started. Pound yen, we know all about the yen. It's just all over the place. Pound New Zealand starting to come down nicely. So there you go. There was a short there, which I took last week, but I also took a nice long there the week before. So at the moment, you should be able to do both right now. But when they announce that coming down, and the thing that worries me about the pound is we went up in quarters and then in halves occasionally. Everybody's starting to come down in quarter percents very, very, very cautiously, because they still haven't hit their CPI targets. We have hit our CPI target. We need to start dropping this now. And the first one is going to be 0.25%, I'm pretty sure. But if that suddenly drops to 1.7 or something silly like that, that's going to have to come down a lot faster, 0.5% reductions. That is going to make the pound really bearish really fast. If you're long on it, when that happens, you're not going to get out of a position. So, or you're going to find it very hard. Just keeping a very close eye on this at the moment, and especially on financial juice. There's your manufacturing PMIs, 43.5. So virtually target on that. That's CPI, sorry, manufacturing PMIs I was looking at there. Yeah, with the pound, basically, you just got to be super cautious. Watch financial juice. Anything Bailey says, you need to be watching very, very carefully, because when that starts to go, it's going to go quick, I think. So much rather short only. Pound US dollar, again, this one, I think you can probably trade in both directions fairly safely at the moment. I've had a long there. As you can see, I'm being very cautious with my longs. That one, I took a break even on it because it was 3 days in, didn't go anywhere. That one was in news, no problem. But being very cautious with longs, because that is probably what we would expect. We know the US isn't bearish. It can't be bearish because it's not going to drop its interest rates. If it doesn't drop its interest rates until 2025, it's neutral to bullish for the rest of this year. That isn't. So it's a short. So again, it's one of those flip short only type things, ideally. But when? At the moment, I don't mind taking either direction, but come Thursday, I might change my mind on that. So I will probably, if you want to be safe, stick short only on all EAs going on the pound, basically, and you're going to get much safer trades, because we know it's not going to go through the roof. Yeah, we know it's only going to go one way when they start dropping interest rates. So if you miss a couple of opportunities, whatever. But when you get on those ones, they're ones you can probably hold longer. So, but we'll see. Market does move up as well when it's in decline. Yeah, so market still will take profit, but instead of getting those nice 50% retracements, you'll get 23s. Yeah, so more flag break movement rather than pullbacks, deep pullbacks when we're fighting a trend. New Zealand's, we'll come on to those in a sec. I'm trading less and winning more. That's the way to do it. Over trading kills people. That's what it's all about. Wait for the setups. Don't trade because you're bored. Do something else. Watch something on Amazon. Trying to lower my stress levels. Yeah. Yeah, over trading, massive killer. Speaking of over trading, I'm getting close to blowing the FTMO. 2.7 up. Had to take a little bit of loss again on Friday. Obviously, US dollar yen, I decided to take short, and I've got a CAD yen short as well. So again, the yen is going to kill me or it's going to make it. The reason I'm short on it is to pass the evaluation. If there's an intervention move, I pass. If there's not an intervention move, I fail. That's basically FTMO. Yeah, it's a gamble. It's all a gamble. So I'm gambling on a strong yen move at the moment, but not coming. So this might be a popper today. Wait and see. 1.5% away. Right, New Zealand dollar CAD. Long New Zealand CAD at the moment. Stuck a little bit on it. So first entry was taken back middle of June. We haven't gone anywhere for the first week, and it's gradually been grinding down. I'm quite surprised this has managed to grind down so much, considering we've dropped the interest rate on the Canadian dollar, and the New Zealanders have said that there's a good chance they might need to put their interest rate up. I'm not worried about this trade at all. You can see my targets are all the way up there. This is a long. Fundamentally, this is a long. So I'm just waiting for the New Zealanders to actually kick in some power. I'm 125 ADR average, which is fine. It's nicely bottomed out last week. So if we can break some highs, because we've just been putting in lower highs constantly, as soon as we get that proper structure break of a high, a daily high, we've had a reversal alert there, which has held. So we're day 3 after that reversal. As soon as we get that new high put in, the bulls will start to get interested, and we should just take off on this one. So just waiting basically for it to kick in. You can see there's no relative strength in any direction at the moment. Yeah, we had signal there, and it's just about managed to tap those lows, but really just grinding at the moment, not really strong in either direction. Bias is definitely bullish. New Zealand Swiss stuck sideways. Again, it's a Swiss franc pair. It's all about the news. But overall, this is a bull as well. Yeah. So if you look at this on a higher time frame chart, yeah, you get crazy Swiss franc stuff, but really it's bullish. New Zealand definitely not dropping interest rates. Swiss already have. The interest rate differential is big. It's a long. But we've got no real power in that New Zealand dollar at the moment. It is starting at the moment to power up a little bit. So New Zealand dollar, US dollar, same thing. I've got a long on this one. It's in profit at the moment. I'm just targeting the highs there. I've got New Zealand CAD and New Zealand US, both very similar currencies, but obviously the US will move much more on news than the CAD, and we've got loads of news coming. So yeah, longs at the moment, just looking to target those highs, but much rather be long than short. But however, this is a kind of a long against a long, so you can trade it in any direction. I don't mind being long or short on that. Entry there. So that's where my entry was. Just got tapped into that. Literally just. It was bang on. Sat there sideways for 7 or 8 days, and then we just did a drop. So I'm in 3 positions now, in profit. Just want a push. ADR. How would you treat New Zealand US? I think there's a delay. Okay, I'm long. US dollar CAD, again, absolute dream. This one, trade it in any direction you like. Long, short, long, short, long, short. Pretty much every trade, every position that I've been in has been a single or a double. It's literally just respecting RSI beautifully. However, I am a little bit more cautious on my longs than I am on my shorts because it should be a long bias as Canadian interest rates have come down. But both of these are affected, they're commodities with respect to oil. So they are both affected very much the same at the same time, which is why you see it doing this an awful lot. It's just news on individual currency driving it up or down, and then it just undoes it all the time. So there's no real long-term bias on this. This is very much the same as the Aussie, New Zealand, the Euro, Pound, in the fact that they are wanting to keep a stable price range to keep both economies ticking over. There's no advantage to the US being massively stronger than the CAD because trade becomes difficult. And there's obviously the opposite is true as well. So up, down, up, down, up, down all the time, has been for ages. US dollar CAD is one of the most beautiful rangy pairs out there. So yeah, keep doing it, up, down, up, down. It's just easy. US dollar Swiss and US dollar yen we've covered already. Not going anywhere so far today by those things. So the big spiky candle. So we're an inside bar on that at the moment. Not going anywhere. Indices hedged on both today. Oh, got a 4-hour drop on the DAX. So FTSE upside target, I'm going to go yesterday's high, Friday's high rather. Downside target, Friday's low. So both of those just shy of ADR targets. So just looking for an ADR move basically. Very much the same with the DAX, just looking for an ADR move today to get out of them. Otherwise, they're hedges. Not very good open today. Bit rubbish. Right, that's all I've got for you this morning. So anybody got anything else they want to discuss? We're just waiting on news today. Well, this week, basically. All week. So, yeah, we're waiting for the CPI numbers. Don't think we've had any yet. Oh, yeah, we have. Here we go. So Bavaria and Saxony have declared. Oh, and North Rhine. So we've got 3 of them already. So 0.2. So ever such a slight tick up on monthly as forecast on the yearly. Saxony is down yearly. Monthly as forecast. Rhine 2.2, which is down yearly, monthly up. Very mixed results here. So very, very mixed results. There's no bias on this at all at the moment. So I suspect the market's not going to do an awful lot with it. Let's see if there's any movement on the euro. So bearish against the Oz. Bearish. Bullish. Nothing much. Slight bear move. When did that come out? The first one, 9 o'clock. So it's literally just come out. But that move started way before. So as you can see, since the news has been released. So it's. I don't think we're going to get much off of that CPI this morning. They might wait until the last one. I think the 6 states. Yeah. So the 6 states, we've had 3 declare already. So we've got 3 left. So it's not the be-all and end-all. Bavaria, I'm not quite sure which is the biggest one. I'm not very good on my German geography. But so next news, PMIs this afternoon. Afternoon, Danny. What did you say about Aussie, New Zealand? Still in a short from last week. So Aussie, New Zealand, yeah, I mean, the bias on these is bullish against bullish. So it's range. So it's a very large, wide range that we're in at the moment. You've got a smaller range there. Yeah. sort of a little bit around that area, but we're towards the upside of the range. So it's either going to react here and push back down, or we're going to push up into that high 200 ADR. So there's potential of another couple of ADR to the upside, in which case then you are, reaching the highs where the limit orders are going to trigger anyway. So either it's going to be up there and you need to scale in a couple of positions, or it's just going to play out to the downside. But the bias, because it's a long against a long, the Aussie normally wins. If you go back out further, obviously this is a daily chart going back to 2017. Yeah, there is no reason for any one of these to become more bullish or more bearish. It's not in either of their interests to outdo the other. But because Aussie is the larger economy, when there is a difference in interest rate movement or something, the Aussie is the one that tends to go on the big runs. But it will always undo itself. So as you can see right now, we're in a really tight contraction. It will probably burst out when we get the first interest rate change on either the Aussie or the New Zealand dollar, but we don't know. That's the interest rate rally, as you can see. So when the interest rate rally started, the Aussie was a clear winner. When the interest rate rallies kind of stopped, where are we? 2023, we're here. We haven't gone anywhere. So we're waiting for the interest rate drops to start, but they've both said they've got one more in it, possibly, but we don't know. It's so difficult at the moment because the entire market is driven on interest rates. We just get mixed messages from the banks all the time on interest rates. So the market has mixed messages all the time. So it doesn't want to do anything. No long-term moves, is there? You can't put a long-term move on something that you've got no information on which direction it's going. So you don't go anywhere. You range. That's what we're doing. So that would be what I suspect we're going to get, because that's where the limit orders are for the shorts. And the longs, we are somewhere around there. But short-term, there'll be limits sitting there. But, it could... You just don't know how far it's going to go within the range. Obviously, nobody knows that. So I think you're fine being short. Likelihood is we'll at least test this, I think. But whether or not we have to go 200 ADR first before we do that test. So it's either going to do that and then it's going to come down into there, or it's just going to come back down and retest this area. But that's the whole point of position trading. We don't know where it's going, do we? So if you're in it short, you may need another two. Took your advice. Loving the US dollar CAD. Yeah. Very good. Took my first US 30 trade, hit TP so fast. Amazing moves. Yeah, Friday. Oh, yeah, Friday was... remember I said Friday was end of quarter. We had some big volatility on Friday across everything. So indices, big old day on the indices. So we had, what was that, 92? So that was just over an ADR on the FTSE. But looking at the US indices... Yeah, look at that. That massive spike at the open. I mean, the Dow went absolutely... I mean, the Dow basically broke on Friday. I hit 5R target within the first minute. It was straight up target. I was like, thank you very much. NASDAQ, same sort of thing. But look at the ADRs. Yeah, we had 370... So that was 247 ADR. So that was 150 ADR. With 36 on the Dow, we got 53. S&P, we got 740 or 74 off of 42 ADR. So it's 150 ADR moves. It's basically just the market getting out of positions on Friday. But look at what actually really happened to the Dow. We opened there, we closed there. Went nowhere. We opened there, we closed there. So it's an ever so slight down day. Neutral, but that's the volatility that you get. And then sometimes it just goes one way on end of quarter. It's like the triple witching thing. It's just, it goes and it doesn't stop. Same on Forex as well. 125 ADR pound Swiss. Swiss franc getting hammered today. You know, again, this is why I'm not trading this Swissy at the moment. It's so unpredictable. The Swiss, they're just dumping the Swiss. And they're properly dumping it as well. New Zealand Swiss, Euro Swiss, Pound Swiss, all ADRs by, you know, the beginning of London pretty much, isn't it? Unpredictable. But yeah, we had some fairly decent movement on quite a bit of FX as well on Friday. There you go, Aussie Swiss again, look. Huge move. But this is the danger of the Swiss franc at the moment. So the Swiss franc bias is short because of the interest rates having dropped unexpectedly twice. Yeah. And that is what the market will want to do. It will want to be long everything against the Swiss franc. However, at any point in time, the Swissies could just go buy it. And it will dump like that. Out of absolutely nowhere. There'll be no warning. It would just happen. So it's one of those pairs. And, you know, we, as traders, what we need to make money is volatility. You can't make money if the market doesn't move. Volatile markets make you lots of money. Volatile markets are also incredibly dangerous. US dollar Swiss ADR. There we go. So, you know, you'll be down there doing 225 ADR in a day if the Swiss decide that's what they want to do. None of the other currencies do that. The Swiss, they have the power to do this because it's a Swiss national banking system and so much transactional movement goes through the Swiss National Bank. That's what Swiss bank accounts are for. Interest rates are low. It's where you put all your money when things go wrong. You know, it's just that place where if you are running a pension fund, for example, and you need to rejig investments, you will take the investments you have, liquidate them, put them in the Swiss franc to hold them. It's like a savings account, which means that it suddenly gets injections of money from nowhere because interest rates are low. It's safe. Why we call them safe havens. So you get these crazy moves. But at the moment, you should be longing it. You should be longing everything against the Swiss franc because their interest rates have come down unexpectedly twice and the market is caught offside. It needs to be doing corrective moves. But at any point, they can screw you. Yeah, it's dangerous to trade at the moment, I think, the Swiss, which is why I'm not trading it. I've got plenty of other instruments I can trade safely. And that's not one of them at the minute. So the only reason I'm cautious is because I've never traded through these conditions. I've never traded through an interest rate rally before. And I have never traded through an interest rate drop before because we haven't had one in the time I've been trading. So I just don't know what to do. And it's safer if you don't know what to do to stay out of what you don't know. Everything else interest rate wise is liquid and just will move with fundamentals. The Swiss and the yen, they don't do that. So thanks for the tip, Danny. Very much appreciated. $2 Australian. Very good. Thank you very much. Much appreciated. Thanks, Lee. You make everything clearer. Good. Well, I make it as clear as mud because I don't know where it's going. I don't know where anything's going. I just know what could happen. Yeah, that's what trading's about. Trading's about planning. Yeah. So if you go short, what are you going to do? Where's it going to go? Well, I think it's going to fill this propulsion gap. So you set your target within that propulsion gap. If it doesn't go short, you plan for what will happen if you're wrong. And if you're wrong, it's going to move up into these propulsion areas, which they sold from, or it's going to move up to that limit order, which they sold from before. So you just have to plan when you get up to there, you will get out on one of those. Yeah. So every time it pushes, it pulls. Every time it pulls, it pushes, etc., etc. So you're just riding the waves, basically, at the end of the day. You don't know how long the wave is going to last. You don't know where the wave is going to end. You just know if the wave is going up, you need to be getting on the other way, ready for when the wave comes down. You just don't know when it's going to happen, which is why we use small lot sizing so that we can survive the waves. Occasionally, you can't survive the waves. But as soon as you get off the wave, it does exactly what you're expecting it to do. I just couldn't survive the wave. I was drowning. I had to get out. Over leveraging. But you also can't know what the leverage is. This is the tricky part of trading, isn't it? You know what's going to happen at some point. You don't know when it's going to happen. So the problem is, what lot size do you use to start with? Because if you knew how far it was going, definitely, you could calculate the lot sizing to use to get out. Or you would just basically wait until it got there. Which is why everyone goes, oh, support and resistance. It's brilliant. But support and resistance is only brilliant when support and resistance works. There was a lovely resistance there. Whoops. Yeah, it doesn't work all the time, does it? Yeah, support and resistance is fantastic. But you can always see it after it's happened. Resistance, support, 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 support. Very clear, isn't it? But it's only clear because we can see the whole picture. Now find that support resistance. Yeah, it's there. But it doesn't look clear, does it? Because at the hard right edge, it's a completely different game, which is why everybody's backtesting in theory works when you can see it. But that beautiful resistance that held there for that lovely massive short, at that point there, you were like, it's broken out, it's pushed back, and there's a whacking great wick to the downside. That's massively bullish. I'm going to long that because it's a breakout. Completely different, isn't it? When you work where we work, which is here, which is why it's impossible to make most strategies work, because the market is not accurate at all. It's completely inaccurate with everything it does. Support, 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 resistance, resistance, beautiful support resistance. But it's not. Look at all these wicks. They're all over the place. That is a support resistance area. All discretionary. But the big ones, obviously, this is why my indicator plots monthlies and weeklies. Yeah. The banks and institutions and large traders work in daily, weekly, monthly movement. So that is where they stopped at that month. And they started selling with a large propulsion gap, big order, which got retested and added to twice. Yeah. When we get there, these guys that are short, if they still want it short, that's what's going to happen again. It might go there, 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 or there. Don't know where it's going to go, but somewhere in that range up here, you'll be in. Everything is completely woolly. Nothing is accurate. That's all you can do. Guesstimate. Good word. Right, that's all I've got for you today. So I'm just going to manage these hedges, which are terrible today. They're just, markets really just got nothing today. DAX is definitely short at the moment. We've hit the propulsion gap, but the gap down is to there. So I reckon we got probably a little bit more downside in us today. So I will get out of the shorts if we can get back down into that gap. And then they'll probably pull back on the gap. So target to the downside, obviously just below ADR. Yeah, a bit of a mess today. All over the place, isn't it? But we had some good days last week where we had some lovely, big, strong breaks. Thoughts on gold? Don't trade gold. It's the US dollar. So what's your thoughts on the US dollar? For me, the US dollar is neutral. So gold is neutral. When the US dollar goes up, gold goes down. When the US dollar goes down, gold goes up. So look at the euro US dollar, which is the dollar index upside down. At the moment, it's coming down, which means gold is going up. Where it's going, I don't know. Nobody knows. But yeah, So we've got a strong US. No, gold would be going down, yeah. So strong US, gold going down. Or is it? It's going up again at the moment. I don't know. Don't trade gold. That's Mr. Wick. 50-50. He's probably right. I don't know. No idea. Yeah, John always knows because John's got a time machine. John knows everything. He's very, very clever. He knows. Gold tends to move nicely with RSI extensions. Yeah. I just don't trade it. So basically, because I position trade, I don't trade gold because it is erratic. When we have gold is another safe haven, yeah. So when we have times of trouble, people buy gold. The problem with gold now is since the war kicked off in Russia, and Russia has a massive stockpile of gold stocks, there is a lot less of it available. So the price is less manipulatable because you can't buy Russian gold. So it's become, I think, a little quieter than it used to. So it's probably a little safer to trade with position trading techniques now because it's not quite as mental as it used to be. But even so, you will get, I mean, this is a great example. This isn't obviously not gold, but this is the type of movement you get on gold. It will just suddenly take off for no reason. And you look at the US dollar, and the US dollar will be gradually grinding down, but gold will have gone mental. And there's no real reason for it, apart from obviously there's a large gold purchase happening. Why? Who knows? Who cares? Doesn't matter, does it? But that's what happens in the market. And something that's unpredictable and erratic like that isn't good for position trading, which is why I eliminated it. Same with oil. Oil does the same thing. It has crazy movements every now and again that just goes completely off. So got rid of it. But it probably does work well with RSI extensions at the moment because it is less erratic. So, but yeah, I'm not getting into it. You'll learn after trading for such a long time, there are things that you like doing that don't make you money and things that you don't like doing that do make you money. And if you keep going back to the stuff that proves over and over again that you don't make money from it, eventually you just have to go, no, I'm not doing it anymore. And that's why I eliminated gold, because I looked at my P&Ls and I spent time looking at all the accounts I've traded and what I've done with gold. And it's never come out at the end of a long term, a year, a quarter, whatever. It's never come out profitable for me. And I don't know why, but I don't need to know why. All I know is it hasn't worked, so I don't do it. That's it. If you try and look for the reason behind everything in this market, it will drive you nuts for the rest of your life. This is irrational, and it will stay irrational longer than you can stay liquid. Yeah, it is irrational. This will suddenly go like that, and you'll be like, why is the Euro US kicked off? Don't know. Nothing going on in the US, nothing going on in Europe. It will just go like that. It goes like that because banks and institutions need the price moved there for some reason. You don't need to know why. You just need to know it's happening. And you need to deal with what is happening. You can't understand everything in this. Why is the Swiss franc getting killed today? Don't know. Don't care. It's getting killed today. So what are you going to do about it? That's what you need to worry about. Focus on what's happening rather than why it's happening. Because, this especially Forex, more than anything else, 80% of what happens in the Forex market is not seen on a chart because banks do over-the-counter transactions between each other. They don't even hit exchanges. You don't see it. Yeah, if two banks have got transactions of equivalent amounts on the CAD Swiss to do, it's cheaper, easier, and faster for them to pick up the phone and go, got 100 million CAD? I need Swiss. Yeah, I have. Thanks. No commission. Done. That's it. Yeah, that's the way it works. Over the counter, OTC, they're called. Yeah, we see general movement by speculative banks and institutions, so we can see where they're placing their orders. But what's going to happen when we get back to where the orders were placed? Again, it's 50-50. Why were they placed? Don't know, don't care. Usually it's a news event, but doesn't matter. Why didn't it stop there? I don't know. Doesn't matter. Don't worry about it. Everybody worries a lot in this industry about understanding the whats and the whys. You should be focused on, what do I do if? Plans is what makes you money. What happens after you press the button is how you make the money, not why you press the button. You have to have a why. If you don't have a why, you can't get in. So you've got to have a system. But if your system is trying to use a set risk-reward ratio based on completely random movement, nothing you've ever seen in the past will repeat itself. Therefore, no system that uses fixed stop losses and risk-reward ratios can ever work in the future. Because the random events that caused the profitability in the past will not repeat themselves in the future. Can't work, can it? Just the way it is. But accepting it is very hard because we need order in life. Yeah, you can't have randomness. We don't like random stuff. And accepting randomness is impossible for most people. But facts, yeah, if you do something rather than backtest it, if you trade something for a year and don't make money with it, and every time you trade it, you lose, the facts of the matter are, why? Don't know. But the fact is, don't make money on gold. Don't trade it. It's easy to remove it, isn't it? Same as the reason I'm not trading yen at the moment. I will be trading yen again. I'm not going to stop trading the yen, and I won't stop trading the Swiss. I just don't know what they're going to do at the moment, so I'm undecided. But in the past, they've both made me lots and lots of money. So I will carry on using them because they both make me lots of money. At the moment, though, I'm hemorrhaging on them because the market conditions are wild on these pairs, because one of them is being squeezed to death and is about to go bankrupt. The other one is unpredictable and does what the hell it likes. It always has done. But right now, because interest rate drops are starting, we've no idea what they're doing and when they're doing it. So the fact that they've said they can intervene, i.e. pull the button and shoot you at any time, probably doesn't make it the safest thing on the planet to trade, does it? But that's the decision you make as an individual. A lot of people probably making loads of money at the Swiss franc at the moment. Great. If you took a long on the Swiss franc on that RSI extension against the CAD, good job. If you shorted it there, unlucky. But, you should only be long in it because they changed their interest rates again. So you shouldn't be shorting it if you know fundamentals. But the fact that they came out and said, yeah, if you keep pushing us, we will push back, just doesn't make it tradable for me at the moment. I can't believe the Japanese didn't say anything last night. It's the weakest the yen has been. Yeah, I know. I looked at the news feed this morning and I was like, why have they not said anything? It's worrying. UK manufacturing PMIs come out down. Again, inflation dropping. You've got to get these interest rates down, Bailey. Sort your life out. Yeah, nothing. I don't know. The Japanese are... I don't know what they're doing. I don't think they know. I've said it before, haven't I? What can they do? Yeah, if your interventions aren't working, you can do it again, but every time you do this, it costs you trillions and trillions and trillions of yen. It just hemorrhages your money. So if you keep hemorrhaging your money, eventually you don't have any left. Then what happens? I don't know. This is why I'm not trading it. I don't know what happens. Look at the Swiss franc peg removal going back to 2014 and what happened. Yeah, that thing went absolutely... 2014? Yeah, that thing went absolutely nuts. Yeah, what happens when the yen goes bankrupt? I just don't want to be in any direction on it when it does. It's not going to at the moment. Yeah, there's still room to go, but I've no idea. I don't think they have a plan. And I said this last time. I remember saying it. I don't think they know what to do because this is what they used to do and it always worked. It's not working. So what do? They have to pick the phone up to the US and say, guys, we need help. But the US cannot help, i.e. give them a little bit of an interest rate differential because they can't drop their interest rates because inflation's going up. So the US are unable to help. So businesses will start to go bankrupt because they cannot export to the US anymore because the cost of the US yen is too high. So what happens next? Never been there, have we? I don't know. I don't know what the economics are for the yen options wise at the moment. But what I do know is if I get back down to 125 ADR today, I should be having all of it off. I don't want to be in it anymore. It's just not happening, is it? Another 2 days stuck sideways. Dead in the water. Bipolar, yeah, all these markets are bipolar. They have to be because they can only go up or down. Binary. Morning, Abdi. Guru's lie. Keep working the Volkswagen trades. Stop dreaming about the Rolls Royce one. Yeah. Gurus are selling you money. Gurus are just selling you stuff, aren't they? That's literally all it is. They're selling you stuff. It's like the old adage of, those that can't teach. Yeah, everybody tries trading. They can't do it. So they teach you how they were taught, but it didn't work. So all we're doing is we're passing on useless information that doesn't work. Most of them, aren't they? And charging you for the privilege. Anyway, the circle of life, passing on the information. That's what we do as human beings. We pass on information. It's just 90% of it at the moment is just crap, thanks to social media, isn't it? So we're just getting past rubbish. So I've just got a platform frozen over here for some reason. Right, yeah. We look like we're turning back down again. So I think this DAX is going for the gap today. So gap fill and out on the pullback of that move is my plan. FTSE's just stuck. So okay, so I'll be back tomorrow. Live room this week. I think I'm going to have to change Thursday because Thursday afternoon at the moment is also I've got the dentist. Yes, I am definitely changing Thursday. So Thursday, I'm not going to do the 2:15 because obviously the New York markets are shut. So I'm going to move that to another 8 a.m. stream on Thursday morning. Yeah, because I've got the dentist and obviously New York's not there, but we will be there for it's election day, isn't it? So yeah, so we'll look at what's happened with the Swiss CPI and the Swiss movement, and then I mean, you can't plan for what's going to happen to the pound. It's going to go nuts, isn't it? So we'll wait and see what happens there. So yeah, Thursday I will move back to 8 o'clock. So tomorrow afternoon we'll be trading the New York Open. Have a look at what's gone on with the news so far. We'll have the CPI flash estimates out. We'll have had Lagarde speaking, and Powell is speaking at the Open. At the ECB forum. That might be interesting. Open tomorrow. Nothing much we can do about it, but yeah, so I'm going to trade the Open tomorrow anyway. All right, so have a good one. Anything you need, let me know. I'll be in Telegram or Discord. Other than that, I'll be back tomorrow afternoon at 2:45, and I'll get that one changed and updated on the website as well. All right, so have a good one. Anything you need, let me know. Otherwise, I will see you next time. Have a good one.